Real Agriculture.com's coverage of Crop Week in Saskatoon is brought to you by FarmLink Marketing Solutions, BioVision Seed Labs, the Canadian Wheat Board, and High Stick NT.
Consensus on canola acres this year is anywhere between 18 to 20 million acres. I think that is the intention of the Western Canadian farmer to put that in. Whether that actually happens or not, that's a big wild card right now, because we certainly do know there's a wide swath of territory in Western Canada, Saskatchewan in particular, and into Western Manitoba that has very wet soil conditions. And was that going to be problematic for farmers getting in the fields this year? In most years, I always hear from the guys that are in the worst case scenario on the prairies, and they give me we're not going to be able to get a crop in, or in the fall time we can't get the crop off. But every year, year in, year out, it always seems like the crop gets in and gets harvested. Last year was an exception. And so I definitely have to keep that in mind, that this year, while the intentions are there, we may not necessarily get those acres.
Is there a commodity right now, Mike, do you think is kind of winning that, has the upper hand in that acre battle?
Absolutely, it's canola. You look at, and I do this from a very generic point of view, using SaskAg cost of production numbers, and they're generic, fertilizer, seed costs, and chemical costs and such, and compare that with the current, today's fall delivered bids that we see across a broad range of different cropping options we have out there. Canola is hands down the winner. Farmers don't always just necessarily operate according to what the economic situation is to crops, because they have rotational considerations and agronomics that come into play here. But the economic incentive is easily leading the way towards canola and oilseeds. In my mind, it's unquestionably a global oilseed and vegetable oil market, more so that it's affecting the price of canola than about individual localized situation on canola here in Western Canada. Obviously, the size of the crop we produce is a very big deal for local prices, and in terms of basis opportunities that are offered to growers and such. But it's the demand-driven international market, led by China and Southeast Asia, which is the main component that is leading this market higher right now. And even though we've increased in the StatCan number, 1.4 million tons in the final StatCan production estimate, in a normal year, we would have been down $30 a ton on that day, but we were up 5 or 6. And it just told me that the international situation far outweighs the Canadian conditions in terms of what the true influence of price is. It's very difficult to put a hardball number on anything these days. We are at price levels even today that, with the exception of that brief period of 2008, we've never been in before. And I think it's a scenario that, what do you use as your measuring stick now? So to me, rather than picking an absolute price, because we were a couple of months ago, we were at $480, $500 futures. I said to my clients, I think we'll see $600 futures, but I didn't think we'd get them this quickly. What's the next point? Is it the 700s that we reached in the frenzy of 2008? Possibly, but it's hard to envision us getting there, but the possibility is there. So rather than actually picking hard pricing targets, I'm looking at market character. What's going on in the marketplace from a demand component? Right now, at today's high prices, demand still is buying the inventory. So obviously it's not scaring them away. At some point, we're going to reach that critical threshold where price starts to squeeze off demand. And when we see the canola market maybe jump on the open for whatever reason, $25, $30 a ton, but then closes down 10, that'll be a red flag. That'll tell me we've hit a point here where buyers have started to shut down. Or we get into a scenario like 2008 where we had a rising market and then it went parabolic. It went straight up, where we had limit up, and gaps on the charts that are going all the way up. The physical trade and the cash market where basis levels widened right out. The physical trade was being factored out of it, and you're now just filled with speculators. And those guys are great to be on board with when the markets are rising, but you don't want to overstay the party.